A warm greetings to you all. Myself, Dr. J. Pramila, belongs to the Department of Commerce Self, V.V. Vaneeperumal College for Women, Pradinagar. In this video, we have to see about reissue of shares. Reissue is happened at the time of after the forfeiture of shares. Forfeiture of shares are the properties of the company. The board of directors can reissue the shares in two ways. One is at a time the forfeited shares fully reissued, or in part of the forfeited shares may be reissued to the public. First we have to know the term forfeiture of shares. Forfeiture means the shareholder does not pay the allotment money or the call money. That shares should be collected from the company is called forfeiture. Next, that forfeited shares may be reissued to the another people. That is reissue of shares. And then example, reissue of shares. If IJK Limited forfeited the shares of some person, that shares may be reissued to the some other people. That is Kapil means that is called reissue of shares. So, one owner of the company should be chased by the company and then it is sold to the another person, the another owner of the shares. That is called reissue of shares. So, what are the points to be noted while reissue of shares? First, the amount collected from the new allotee. That is, the particular number of shares should be collected from the some other person. That person is called new allotee. And then second point is, if the forfeited shares are reissued at a discount, that means the value of shares should be reduced from the nominal value of the shares. What do you mean by nominal value of the shares? The original value of the share. For example, if the share value is 10 means that value is called original value or nominal value. The amount of discount should not be exceed the amount already collected on them from the defaulting member. So the next point is, if the shares are reissued at par, the entire amount of forfeited shares account should be treated as the net profit on reissue and the fully transferred to the capital reserve account. So, there is amount which are collected from the new allotee. It is treated as a profit of the company. It should be transferred to the capital reserve account. And then next point is, for reissue of shares at par value means the entry will be bank account debtor, forfeited shares account debtor. The discount on reissue value should be debited in the forfeited shares account, and then share capital account should be credited. And then next case is, if the forfeited shares are reissued at premium, the premium should be credited to share premium account. The entire amount of forfeited shares account should be treated as net profit on reissue and the fully transferred to the capital reserve account. And then the entry will be, for the premium was not collected originally from the existing shareholder means the entry will be bank account debtor, forfeited shares account debtor, and then to share capital account, to securities premium account. Now only the securities premium is collected from the new allotee. And then second case is, the premium already collected from the existing shareholder means the entry will be bank account debtor, forfeited shares account debtor to share capital account. So the next case is, if the forfeited shares which were originally issued at a discount means the discount on reissue of shares should be re-recorded. The entry will be bank account debtor, discount on issue of shares. The shares are issued at discount means that should be pass the entry as discount on issue of shares account debtor to forfeited shares account. What else? It is a remaining balance that should be debited in the forfeited shares account to share capital account. And then next point is only a part of the forfeited shares are reissued. So the proportion of the net gain on the shares reissued should be transferred to the capital reserve account. The balance in the forfeited shares account is added to the paid up capital in the balance sheet of the company. And then next case, we have to go through some example. Hutch Limited resolved on 1st May 2024 2000 ordinary shares of 10 each. 7 rupees 50 paise were paid, be forfeited for non-payment of final call of 2 rupees 50 paise. On July 15th, 2024, 1500 of them, the above shares were reissued for 6 rupees per share, fully paid up. So, 2000 shares are not paid the final call money. So, 2000 shares should be forfeited. So, the entry for forfeiture is share capital account debtor 2000 into 10, 20,000. The amount not collected is final call money. So, 2000 into 2.5 should be credited in the share final call account. So, the amount will be 5,000 rupees to forfeited shares account. The amount already collected from the shareholder. That is 2000 into 7.5. So, the amount is 15,000 rupees. And then we have to pass the entry for reissue of shares. So, among these 2000 shares, only 1500 shares should be reissued to the public. So, the entry is bank account debtor 1500 into 6. So, 9000 rupees. Forfeited shares account debtor, the remaining balance of the value of share is 10 rupees. So, from the 10 rupees, we have to deduct 6 rupees. We get 4 rupees. That should be debited in the forfeited shares account. So, the amount will be 6000 rupees. The original value of the share is 10 rupees. That should be credited in the share capital account. So, to share capital account, 1500 into 10, 15,000. And then we have to pass the entry for capital gain. That is the 5 way of reissue the shares. The company earn a profit. That profit should be transferred to the capital reserve account. So, the entry will be forfeited shares account debtor to capital reserve account. Here, the proportion of the shares were reissued to the public. So, among the 2000 forfeited shares, only 1500 shares are reissued. So, we have to find the proportion value. So, for 15,000, we forfeited 2000 shares. We only reissued 1500 shares. So, the amount of forfeited shares account is 11,250. From the 11,250, for the reissue of shares, we lost 6,000 rupees. So, we get a gain of 5,250 rupees. So, again I explain. Only 2000 shares are forfeited. Among these 2000 shares, only 1500 shares are reissued to the public. So, the proportion will be found out. So, 15,000 divided by 2000 into the reissued number of shares, 1500. We get 11,250. From the 11,250, we deduct the loss on reissue 6,000 rupees. So, the gain is 5,250. The another example is Nandan Limited issued 1000 shares of 100 each at a premium of 10%, payable as follows: 25 rupees on application, 35 rupees on allotment including a premium, 20 rupees on first call and 30 rupees on final call. The next one is 900 shares were applied for and allotted. All monies was received with the exception of first and final call. Note that point, first and final call are not paid by the 1000 shareholders held by Meena. These shares were forfeited and reissued at 60 rupees. Give journal entries for forfeiture and reissue of shares in the books of Nandan Limited. Only the entries are asked for forfeiture and reissue. So, 100 shares are forfeited. Those shares are reissued at 60 rupees. So, the entry will be, first we have to forfeit the shares. So, share capital account debtor 100 into 100, 10,000 rupees. The amount not paid is first call and final call. Separately, that call amount is credited. So, the entry is share first call account 100 into 20, 2,000 rupees. To final call account 100 into 30, 3,000 rupees. And then the amount already paid by the allottee is 1,000 into 50. So, we get 5,000 rupees. Here, the share premium account is not credited because the premium amount already paid by the shareholder. And then next entry is for reissue of shares. So, we have to collect the money from the shareholder. So, bank account debtor 100 into 60, 6,000. The balance, the original value of share is 100 rupees. The shares are reissued at 60 only. So, the remaining 40 rupees should be debited in the forfeited shares account. So, forfeited shares account debtor 100 into 40, 4,000 rupees. The entire original value should be credited in the share capital account. So, entry is share capital account 100 into 10, 10,000 rupees. And then next entry for transfer of share forfeited profit to the capital reserve account. The entry is forfeited shares account debtor to capital reserve account. Here 100 shares are forfeited, that shares fully reissued to the public. So, the difference between the share capital account should be transferred to the capital reserve account. So, 5,000 minus 4,000, we get 1,000 rupees. This is the profit of the company. Thank you.